Good morning. Happy Monday. It's a pretty significant day in crypto, which seems like happens every day. This is a quick check-in. We're having a short space to provide some updates, and I'm excited to be here with you guys once again. This is a bit of an interim show in between some larger interviews and guests, but as a quick catch-up, I've been working with the Stable team for the last few months. I'm really excited about the stablecoin space. I think it's incredibly important and transformative. I think the product that Stable is building is really um, impressive, and these guys are moving really fast to focus attention on stablecoins in particular. Like, obviously, this is technology that's integrated in many places, but I don't think it's getting enough attention from people who are um, building for markets all over the world and looking outside of just USDC, USDT, things like that. So I've been having these spaces every few weeks. We'll have another one very soon, but this is a bit of a quick product update. Fran, you were not on the call last time. I missed you. I hope you're well. How are you doing today?
No, it's always a pleasure to be here. Thanks for hosting us as always. I was traveling through England. So yeah, just travel, couldn't make the last show, but listened to it afterwards. It was great as always.
Very nice, very nice. Seb, good to see you as well.
Thanks, great to be here again.
Absolutely. So I think, in terms of Stable, the biggest update that you guys might want to share about is base integration. But before we jump into that, any headlines or news releases that you guys have been paying close attention to or is exciting to you?
Well, it's hard to keep up, right? every week there's about a dozen earth-shattering announcements with new USD or Treasury assets being issued by various different companies. I think the space is in in a gold rush, in a flurry to sort of pick the winners and create moats and defensible market shares and all the rest. Um, I'm particularly happy with the regulation coming out of the US. Seems to be a little bit of common sense in there. So we'll just have to see how that shapes up the environment and the players out there.
Yeah, there was a flurry this week. I mean, I guess part of it could be like big fintechs and payment companies perhaps just wanting to get their names in the headlines alongside the word stablecoins, but it seems like there was a lot of news coming out this week. Of course, Kraken announced its Crack Pay, not the best name in my opinion, but that's for cross-border and local payments. Coinbase also announced perpetuals. They're going to launch perpetuals, which is kind of in competition with the DEX or the decentralized platform Hyperliquid, along with a number of like traditional payments. Companies like Fiserv announced its own stablecoin. They're kind of like in merchant services like Stripe. Bolt, another kind of e-commerce checkout, introduced stablecoin payments. And then on the like retail facing side, Robinhood announced they were going to launch tokenized like equity shares in the European Union. And then Revolut, who most people will be aware of, announced big plans to offer like one-to-one swaps, zero fees, and free withdrawals. And we finally got to hear from Jerome Powell saying that the crypto industry is maturing, and his or the Federal Reserve's understanding of it is improving, and it's becoming a bit more, a lot more mainstream. So that was nice to hear finally.
Yeah, I agree. I watched some of that live, and it was a pretty overt, I wouldn't say endorsement, but basically whatever the opposite of hammering down and destroying is, it was that, and very nice to see. Kind of a macroeconomics question for dumb people like me. Is it your interpretation that post Jerome Powell, there will likely be interest rate cuts? And then what does that mean for I guess digital assets, but everything else? Because I think people follow this and they hear about interest rates going up and down, but like what is in a very simple way, like what does that actually mean for us?
Right. Well, if inflation is under control, which it very much is now over the last few months, then interest rates can be cut, which has many impacts. One, the servicing of the country's national debt costs less to service, right? They're paying on a smaller interest rate. Secondly, uh, borrowing decreases in costs. And so that should spill over and down into mortgages and everything else, construction, so on and so forth. Um, you have to kind of watch this alongside the M2 money supply, because if the system is full of liquidity and cash and it's looking to borrow, but the rates are still high, then effectively a small amount of people are making a lot of money, right? Um, so Jerome Powell will definitely be replaced. I mean, Trump's out there openly talking about ideating who he's going to select next, which is a massive public communication, or comms, optics, etc. Because the Federal Reserve is supposed to be a private company who's outside of the control of Congress and the executive branch and the judiciary. So the fact that POTUS is currently out there saying that he's contemplating who to select for that position next indicates to me a huge signal that the Fed is going to be rolled up into the Treasury, and it will no longer be private. So I think we're going to see some pretty massive change, far bigger than people expect. How it sort of plays out play by play is going to be the really interesting part to watch out for.
I don't know about the rolling the Fed into the Treasury, but I think the point of announcing his replacement very early is important. The kind of influence that the Fed has over markets is not just the announcement of rate cuts, but the expectation of rate cuts in the future. And as you asked, Board, like what is the expectation when he's replaced? I think that does put a lot of emphasis. If Trump announces a replacement early and people can start expecting that rates will fall as soon as he's replaced, then that has an effect immediately rather than in 6 months' time. That's where you start getting terms like the shadow Fed chair, which I think is an interesting one.
I mean, we're watching a public spat, right? Because they cut rates when inflation was much higher just before the election, for optics. And now Fed Chair Powell's refusing to cut rates with inflation much lower, and the entire industry is like, what the hell? It's like we've been pricing in rate cuts, and he's just continually saying, no, we're watching the situation. And so we're watching a power battle between an unelected, private entity, the Federal Reserve, and the executive branch and the Treasury and all the rest.
We are indeed monitoring the situation. Well, appreciate that. Appreciate that recap. The only thing you guys didn't answer is are they projecting that basically there will be an expansion of the amount of dollars that will exist? And my interpretation was yes, but that might be irrelevant to this particular topic. That was just me having hopium, so we'll see. But to more important news, I did allude earlier to you guys working on base integration. So for those who haven't been on the Stabull website, it's app.stabull.com, Stabull. Now you can use Ethereum mainnet and Polygon.
Dot finance. Sorry.
Dot finance. Sorry, guys, you got to go buy the .com. Who's squatting on that?
That's on the agenda.
Yeah, why would anyone squat that? That makes no sense. Wow. Okay. We'll figure that one out. Sorry about that. Stable.finance, which is also a very good suffix. But base integration is coming. So can you guys talk a little bit about where you're at with that and what that might mean for users?
Yep. We've been testing the base integration for the last few weeks on testnet. So we're hopefully going to be ready to deploy that next week. We're just kind of tying up some liquidity partners so we can have some initial pulls with some liquidity for users to trade against and add liquidity as well. But that is something we're very excited about. We kind of almost think that Base will be kind of the main chain for Stable in due time. And just owing to their Base's kind of support of local stable coins, they've added a lot and they've put a lot of support and effort into attracting local stable coins. So yeah.
Yeah, very good. Jason, over to you.
Hey guys, glad to join. I just wanted to kind of rewind for those people that don't know really even what Base is. It's really sort of like an Ethereum layer, but without the fees. And people that use Coinbase, and we know that Coinbase is really like one of the big onboarders of people into crypto. That's usually most people that are in the United States. That's their exchange of choice. It makes it really easy if you're using Coinbase Wallet to use some of these applications. And we will be really kind of featured as part of that Base ecosystem. So for those that are not familiar with more complicated, layer 2 solutions like Polygon and using MetaMask and things like this, Coinbase will make it a lot easier for everybody to sort of participate. And we really want to make people understand that they can be a participant in this financial market.
Yeah, I mean, for myself, in terms of DeFi, decentralized finance, typically Base is my number one L2 of choice. But I think that also, tends to be true for maybe US based customers. I'm curious from you guys, just looking at other regions, are there any other L2s that are used frequently? Not that you guys should like promise, other L2s that you're considering for stable, but just generally speaking, besides Base, are there any others, say in Europe or in Asia, that you think are really important to consider?
Well, I mean, I'll address it in a different way, right? The old banking system is so incredibly clunky, especially in third world countries and regions, even second world. Just to move money into Central America or Africa is normally subject to up to a 6-month freeze on SWIFT transactions if you haven't done business with that bank before. So what I want to see is, stablecoin integration into the local neobanks, or at least the financial institutions willing to service, retail customers for daily payments, transactional banking services. Think of Revolut, but in Africa, or similar in Central South America, so on and so forth. They ultimately have a bank account in the background holding dollars, but now with Web3 integration of stablecoins, for example, in Argentina, things in shops are priced in USDT. And people go around using USDT because it's more stable than the local Argentinian currency, or has been for the last few years anyway. It's now stabilizing to an extent. So I would love to focus on Asia and South America, as well as Africa. And I think we've got some South African rands in the works to create a pool and make that available and hopefully liquid. But yeah, ultimately, we're finally seeing the beginnings of non-USD stablecoin adoption, and it's because the infrastructure is finally matured to the points that some of these neobanks and sort of non-core banking players are integrating Web3 to make the use of stablecoins possible in the first place. It seems like just having a wallet with some Brazilian real tokens in them is one step too far removed to crystallize mass adoption. But if that tokenized Brazilian real is available in a messaging payments app that's popular, then it's a catalyst for adoption. So, as infrastructure, we don't discriminate against, who wants what pool. People are already asking us for custom pools for various different ideas. So we're more than happy to just have 20 different USD stable coins and tokenized treasuries on the platform if that's what users want. and issuers and their market makers are willing to add liquidity, so on and so forth. So hopefully that answers your question from a different angle.
It does, and that tells me if I start Bored USD that you guys will consider it if I can get enough interest in that particular token.
Might not be the best name, but yeah, sure.
In terms of adoption of local stablecoins and kind of an effort to bring those on chain, I think Cello chain or Cello is doing very well there. They've got big coverage over Africa and Europe in terms of local currencies. And I also like Gnosis chain as well. They've got a couple of local stable coins by the issuer Monerium. And they've got a MetaMask payment integration as well, which is pretty cool.
Yeah, I mean, competition is good. It's going to drive everyone to be better, cheaper, faster. So love to see that. Jason, I saw your hand up if you want to chime in as well. No, maybe that was a glitch.
Sparking it. Hello, can
Yeah,
anybody hear me still?
you're okay now. Go ahead.
Oh, okay. So I'm actually on a ferry leaving in a small island, so the reception you may lose me, but this is a great place for keeping the coins in the community, and really getting help, because just credit card transactions can have like a 15% payment fee, merchant processing fee, and a lot of times, as Fran was saying, they're going to freeze your funds for up to 90 days. With local stablecoins, you can drop that transaction fee, down into, the sub, 3% range, and still make it worthwhile for everybody to sort of participate. So this is actually really, really big for merchants. The problem with the local, stablecoins is oftentimes there's just not enough liquidity. But now, anybody can sort of provide liquidity into these pools and allow like their local communities to thrive. And this is really a big thing that really hasn't been communicated well as to how it actually works. But it is just like right on the horizon, and really technologies like Stable are going to make this a possibility for even these smaller communities to rapidly adopt crypto in their native currency, which I think is a really big financial unlock, and will empower a lot of these places to now start accepting faster payments, immediate payments, and do it in a permissionless way.
So part of my role with you guys is to ask naive questions. So I'm going to ask this. My assumption right now is that if what you're doing scales larger and larger for specific or for certain local currencies, would you say that it's fair to say that stable coins are going to help reduce price fluctuations or currency value fluctuations? Because it seems the way I'm thinking about it is that 10 years ago there are very few people who can kind of pull the levers and infuse capital, liquidity, et cetera, and control things. But in theory, should stablecoins basically help get rid of some of those spikes that we see in currencies that are not used as prolifically in the world? Does that make sense?
Yeah, I think there's two parts of that. In terms of the on-chain price of these like local stablecoins and even USD stablecoins, that is part of the value of Stable, as it does, one, draw pricing and swap pricing closer to the off-chain price, but it also is like a proactive AMM. So pricing changes with the off-chain price due to, owing to the oracles that we use in distributing liquidity. A lot of times local stablecoins, due to their lack of liquidity, will be pretty stagnant in terms of their price discovery on chain and won't react to off-chain price discovery. You'll see the price move every couple of days when the arbitrage opportunity becomes great enough that an arbitrager will move the price. And then the other part is, if you're asking about the off-chain price and whether stable or even stable coins can help reduce volatility there, I think that is a potential in the future. Say if we're at a point where for a particular currency, half of the trading happens on chain, then definitely blockchain and stablecoins can help add liquidity and make price discovery more transparent. You referred to how 10 years ago, I mean, even now, to this day, the FX market is one of the biggest in the world, but you're right, it's mostly large multinational corporations or countries that are affecting prices there, especially those currencies that are somewhat controlled by their reserve bank or their government. They control the pricing. So yeah, I think stablecoins can definitely bring some transparency and some decentralization to price discovery of currencies.
One more question. This is a bit of a left curve one. Have you guys uh, do you guys think that there is a possibility to ever see private or privacy centric stable coins? And what I mean by that for the layman like me is most blockchains are public blockchains and everyone can see every transaction. There are benefits and also things that are not great about that. But stable coins, as far as I understand, are a tough thing to make private because they have to be backed by a very public currency. So I wanted to ask you guys, like, do you see any kind of future where that might work, or is that a fool's dream?
Depends on the level of privacy we're talking about here. It's a spectrum, right? So at one end of the extreme, Monero, the currency and the blockchain, is so private you don't actually know, can't validate how many tokens are actually in existence. It's a sort of theoretical estimation, and then every transaction is obviously private. It is super annoying to have uber transparency for operational security reasons. In fact, many companies in the space have to obfuscate transactions because it's just a massive attack vector to just have everything coming out of one wallet to, salaries and whatever else, so on and so forth. Then at the other end of the extreme, you have no privacy with central bank digital currencies, and they want to roll them out throughout Europe in October. Typical European innovation, I suppose. But what I'd like to see is some kind of nice blend where there's a project called Tari that I know you're familiar with, Boards, and they have a pseudo-anonymous solution so that if you want to display your transactions and make them available, say you're going for a mortgage or some loan, then you can authorize that wallet or person to see some of your transactional history. But meanwhile, your day-to-day transactions are obfuscated and anonymous by default, right? That would be a nice blend. And then for stablecoins, you have all these edge cases, like say there's some fraud and there's a court order, which has happened a number of times, but more for like international sanction reasons. And Circle, the issuer of USDC, would then freeze some tokens in a remote wallet. I call that God mode, where the issuer themselves has the ability to kind of freeze tokens or remotely burn, destroy a balance in somebody's wallet. That can obviously be abused, and checks and balances need to be there. So, it's a battle between centralization and decentralization, and the world is kind of finding its feet when it comes to what's right in terms of levels of privacy, levels of functionality, levels of centralization or decentralization, so on and so forth.
I think that's also like the benefit of having different chains, as you alluded to earlier. Like for most end users, the idea of having the same stablecoin on different chains is somewhat confusing and even annoying. But that is one of the reasons why there is so many different chains, is because different users have different needs and characteristics they desire in their stablecoins. So I think there's definitely a place where if you desire more privacy, then you hold your stablecoins on one chain, and then if you need to use those either through a payments app that's coming or For DeFi, then you have to bridge them across to use them that way. But I definitely think there's a huge use case for private stablecoins and private chains.
Appreciate that. Yeah, Jason, over to you.
Yeah, along with what Ryan was saying, I think there are some chains that are focused on that. I think there's a scroll that, and also we have an interesting guest coming up in a future show, Eric Alston, that's going to talk about the proliferation of different kinds of stable coins with different backers and different issuers that sort of are going to fill that market need and how that might actually play out. So that's going to be, I think, a reoccurring topic on the show as the technology is constantly evolving, and then like the types of financial instruments that stablecoins enable also kind of level up, and so we're going to see like sort of a compounding effect. I think as time goes on, I think we're just really in the very very early days of starting to see stablecoin adoption, starting to see all the players get involved, and obviously they're all going to come with their own sort of like unique competitive advantages and use cases and um, different slices of the market as it gets a little bit more fragmented.
Amazing. Appreciate the perspective. I know this is meant to be sort of a mini update turned into a 30-minute conversation, which I always appreciate with you guys. Before we wrap up, anything else we want to cover off on before our real show, quote unquote, next time?
Yes, absolutely. We have a new Swiss franc stablecoin pool being launched on Stable this week on Polygon, so keep an eye out for that. We also, as you know, have the liquidity mining program in full swing. So if anyone wants to be a part of Stable and earn Stable tokens for providing liquidity, then jump onto app.stable.finance and you can deposit your stable coins to start earning the yield. And we also have rolled over our stable staking program with Magic Square, so that'll be live for another 45 days. So if you're wondering what to do with your stable tokens for now, then that's a great place to put them.
I strongly agree with that and recommend it as well. Amazing. Well, we'll share updates on the next episode that we'll be hosting on Spaces very soon. Appreciate everybody who listened live, and of course everyone who checks this out on the recorded content line and other content we have. But yeah, thanks guys for joining, and we'll talk soon. Take care, everyone. Have a great week.
Thanks, boy.
Thank you.
Thanks for having us.